Welcome to another episode, Loan with Jen. Whether you are listening to us on podcast or watching on YouTube, today's topic is foreign national loans. So a true foreign national is someone that lives and works and resides in another country. So not every lender does foreign national loans. We do at Legacy Mutual Mortgage, where I am, we do those. But I've got a great guest today. Her name is Cara Eubank. And she is with a company that we do our foreign nationals through. So, Cara, thank you for joining us.
Thank you for having me, Jen.
Absolutely. So, foreign national, so it's people that live and work outside of the US. Let's talk about really what the very first most important criteria is that they have to be in a certain country. So a lot of the programs do have blackout countries, right? Why is that? Why would they care what country someone's from?
So if they can travel, so with this program, a lot of them we can do either a visa if they come from a visa waiver country. Let's just say Canada. They don't need to have a valid visa. If they do come from a country that requires visas, like Mexico, we do have to have a certain eligible visa. Some of the countries we don't. We just we're our lenders. We're a lender. We don't want to lend to.
Yeah, and it's just probably maybe the country is just a little bit economically unstable, and
exactly,
there's world events that happen. So so it is important that if you're in a country that you just double check. And of course the lender, if anyone called me, in fact I asked you about one the other day,
you did.
You check to make sure that that's a country that's on the list. And so let's talk about your program is actually super sleek, and it doesn't require any verification of anything. I just love it. So tell me about that.
I know, it's quite wild. I find it wild myself. So yes, we don't pull credit report because they don't have any U.S. credit. We don't need any employment, nor do we need any income. This program offers 70% LTV, meaning that you have to have 30% down if it's a purchase. And it can only be a purchase. It is only for non-owner occupied properties. So what's great about this, a lot of people, if you're like Austin, Texas, it has a big presence of University of Texas. And a lot of people who live out of the country can come in and buy a property, a non-owner occupied property, maybe for their child that's attending that university. So that's what's nice about this. Yes, it is. It's awesome. So it's quite wild. We do, like I said before, we require an eligible visa if you are from a country that requires visas. We do on this program, they must have 60 days source and season funds, and with those funds being 30 days in a U.S. bank.
Okay, so they're going to have to open a U.S. bank account. So it can be a new bank account, but it has to season here for 30 days.
Exactly.
Okay. Well, that's not much to ask when you're not asking for anything else. Because there are, I'm aware of several other foreign national programs, and they go through and verify income, and they take them through the ringer and documents and translation and everything else. So your program is super sweet.
Thank you.
Super sweet. Yeah, we love it. Yeah, that's really great. So 30% down. Now you do want to make sure, what they put down, they do have to meet a criteria that's called, you call DSCR, but let's explain, I guess, in English what that means.
So it does. So our program personally with my company does have the DSCR, which means debt service coverage ratio 1-to-1. And what that means is, since this is an investment property, when we order the appraisal, the rent comp analysis with the appraisal, that will have on there what that appraiser thinks that property will rent for. So let's just say it's $2,500. That property, the principal, interest, taxes, and insurance, and any HOA fees must be $2,500 or less. That's how this program has been built, is because we like to see that it cash flows.
So they're going to have to put down enough money, and usually 30% probably covers it, but they'll have to put down enough money to where that full payment, like you said, including tax, insurance, HOA, is the same or less than what they could get for rent.
You are exactly correct.
Okay. The only problem or challenge I see with that is if they're like buying a condo that has a real super expensive, monthly HOA fee or something. But other than that, it usually probably should work out.
Yes. Yeah.
And a lot of foreign people I find are wanting to put more down. The concept of leveraging everything they've got isn't as profound in other countries,
Absolutely. And owning in the United States, it's the greatest place on earth.
That's right. That's right. Go America.
Yeah.
Well, very good. Well, it's a pretty straightforward program. So we'll put some more info down in the notes. We have actually an episode we recorded about DSCR loans. So we'll put a link to that. But thank you for joining us today. I really appreciate it. Good to have you on.
Thanks, Jennifer. I appreciate you having me. Thank you so much. It's been fun.
You got it. Talk to you soon.
Okay. Sounds good.